U.S. stocks recorded another week of sharp losses to end the month and quarter, with vicious selling that tipped the three major averages into a bear market. The Nasdaq and the S&P 500 are now in three-quarter losing streaks for the first time since 2009. The Dow also posted a third straight losing quarter, its first since 2015. All of the major indices are down at least 21% on the year. And another warning signal for investors was the personal consumption expenditure, or PCE. And this is the Fed's preferred inflation gauge. The recent reading of the PCE showed prices climbed more than expected in August. So those who are soon expecting a Fed pivot are going to be disappointed. In an interview on Thursday, Federal Reserve Bank of Cleveland President Loretta Mester indicated that she and her peers will maintain a restrictive policy until inflation subsides. And on Friday, Fed Vice Chair Brainerd hinted that the central bank will keep rates high in the face of continued high inflation. For investors, this means more volatility and more fear. But remember, behind the fear is opportunity. And today, two charts beginning with the opportunity index. Well, not really. It's the volatility index, often called the fear gauge. And as you can see in the upper left, the symbol sign is $VIX using stockcharts.com. We've looked at this at a number of times because it has some interesting patterns. First, this big dish from the far left all the way down here and then up. And then also you can see again, the bottoming and basing here, but the upward steps each time, an upward step. Here, though, at the top, it seems to top out at around 35, just exactly what we called on Tuesday. It's coming on down, at least in the last few days. We'll see if this trend continues and it tops, rolls over, and comes down. And then we want to watch out to see where it bottoms and bases. If it bottoms and bases at a higher level, the pattern continues, and it actually continues into a kind of pennant where through time these cycles seem to be getting shorter and shorter and shorter, and it's coiling. And once it coils into the pinch point, it's going to either spring up or down. If the VIX goes up, the market goes down. If the VIX heads on down, the market goes up. And we're not quite sure what's going to happen, so be vigilant. Now let's take a look at our charts. And we're going to continue here with the 2-year weekly on the ONEQ, which is the Fidelity Nasdaq Composite Index ETF, and that's a good proxy for the Nasdaq. And we're looking at this because the Nasdaq has been hit the hardest of the three major indices. As you can see, we're in this, say, channel moving on down. Bottom line of the channel moving down like that, and then the top line of the channel moving down like that. So we've come down here, all these points bounced off, reflected on up, but as we come on up to that top trend line, we get reflected back. So now we're on our way down. I think we have perhaps a little bit further to go, not quite sure. My lines aren't all that great, but I think that we're going to bottom and base coming into next week and the week after, and maybe we'll gain enough strength for an upward move. Not quite sure now. I think the probability in the short term is still on the downside, so just keep watching. Moving here into the volume, it's not telling us too much, with the exception that the last 3 weeks have been pretty bad with that volume heading on up. So it may continue into next week. But here is what's interesting, and we've talked about this before. This is the MAC. We topped out here, came on down. We had an attempt there that failed, came on down. Looks like we tried to bottom and base. We came up here. We got reflected back down. We're coming down here just a slight separation between the fast line and the slow line, but that will, I think, expand in here in the next few weeks or so. But the point being is I think it will bottom and base in this area here, which will be above back here in June and July, so hopefully we'll have an upward trend. I like these bounces or hops right here after a big downturn. You come on up, there's some optimism, people start buying, but then it gets reflected back and then the sellers come. So we keep shaking out those sellers, so there's fewer and fewer of the sellers, and once we're rid of the sellers, then we can bottom and base and rally. So keep looking for that. Now here into the histogram, this is pretty decent as well. Right now it's showing an upward trend. We haven't stopped coming down here on the downside, so this trend line may not be valid. Just keep it in mind. Moving here into the RSI, the relative strength index, we're at a moderately weak 31.92, but yet we still have that upward trend line at least in place for now. Continue watching. Here in stochastics, pretty much the same thing, separation between the slow line and the fast line coming on down. I would expect this to move into that oversold territory below that 20 and then bottom and base hopefully here within the next, say, few weeks or so, and then have another move on up. Same thing here with the Williams. Right now the Williams is at a perfect negative 100. That is fear, my friends. So we'll watch this in the oversold territory here, bounce back and forth, and then perhaps head on up and out, and then that may give us an idea when the Williams is going to pull the other oscillators on up. But for now, I think the mood is still relatively negative, a lot of fear out there, but again, as I said, at the same time, right behind the face of fear is opportunity. So look for those stocks that might be good picks, either dividends, REITs, growth stocks, value stocks, oil, or otherwise. Keep searching for those. Be patient, stack your money, pay off your debts, and be prudent and patient. And for today, that's ChewDog Charts. Thank you.